Obi, thank you for joining me again. I see we are in the world's most spectacular CEO's office in the Grow facility in Oregon. Is that correct?
Find me anywhere else, Aaron. Yep,
Yeah,
here we are.
yeah. Well, great. Well, thank you so much. I wanted to have this follow-up interview after this really wonderful agreement that you announced with Goodness Growth, which I believe is a win-win for both companies. But the press release written was a little vague, and I thought we would kind of dive into that and also get an update on Grown Rogue. So let me just dive in and try to get to the heart of the matter. This is what I read in the press release. Today announced that you have entered into a strategic agreement whereby Grown Rogue will support Goodness Growth in the optimization of its cannabis flower products, with a particular focus on improving the quality and yield of top grade A cannabis flower across its various operating markets, starting with Maryland and Minnesota.
Yep.
What exactly does this mean? And then taking it from there, what is Grown Rogue doing for Goodness Growth?
Yeah, one, great to be here, and thanks for having me again. So I appreciate that. This is really it's a monumental shift in the way we think the industry should start collaborating. And what you have is these, really strong, kind of, call it legacy, more mature market, unlimited license operators like Grown Rogue, who have established this excellence in what we do, understanding the consumer, understanding cost control, really have been able to create profitable businesses in very competitive markets. And you combine that with what we've seen in a lot of the Eastern markets, where they're limited license, very difficult to win, where there's just been a different focus. Maybe they don't understand the consumer as much, it's not as mature. Maybe they don't understand cannabis and some of the operating requirements in order to achieve the success that is required to compete as the industry gets more competitive. And we feel like the combination, the strategic partnership with Goodness is a monumental event in the industry of connecting operational excellence with very valuable limited license. And the goal here is to bring our expertise, our systems, our process, the things that's made us so successful in Oregon and Michigan, to the patients and consumers and customers that Goodness serves in their markets. And the timing couldn't be more fortuitous, I guess is the right word, because Maryland's going adult use here, in a month? And hitting that is just right. Like, all of a sudden the consumer and the patient network really broadens. As everyone saw, which is some of the most exciting news in the industry. I'm surprised there hasn't been more hype around this, but Minnesota going legal is going to be huge. Big market, big opportunity. Goodness Growth, Vireo, has one of 2 licenses currently in that state. And the mandate that they gave us was to come in and increase the quality of their product and replicate what's made us so successful in Oregon and Michigan, and stick that into these 2 states. And so we started working on this in about January, early February, starting to bring our
So this
team.
is not new. When you announced this agreement, it wasn't like you just started. You started like 4 or 5 months ago. Oh, wow.
Yeah, we definitely started. I mean, there's some risks there, right? Assuming that we could get a definitive agreement and a deal done that protects both sides. But there's no such thing as a good deal with a bad partner. And the relationship we had and just the feeling I got from the entire Vireo team was super strong. And we also knew that time is super valuable. And it's going to take 3, 6, 12 months in order for the full Grown Rogue effect to permeate Vireo operations. And so waiting to get the lawyers, and there was some other kind of just unforeseen delays that these deals just take time. Like, we made the conscious effort, and we had some protection to really push forward on this in a big way and start implementing our systems. And so we're like we're 5 months into this, and committed, right? Like my team's been traveling there. I haven't been out to the sites in maybe 6 weeks, but like, I was to each of these facilities, half a dozen times over the course of the year already. My team's traveling out there frequently. Just relocated one of our director of cultivations into these markets. And so just leaning in a really strong way, knowing that it takes time, you got to get the right scheduling, the planning, and really getting prepared for the fact, like, again, Maryland's going adult use soon, Minnesota's coming, but make sure they're in a really strong position to be successful as these markets roll out.
Now, when I think about the grown rogue effect, or I think about what your company has done, which is so kind of spectacular, and it's the reason I'm an investor, it's the reason I've written about you, it's the reason I've interviewed you, is I've made the case, and I think you even referenced it, that operational excellence is really what's in short supply in cannabis, not limited licenses. And watching you be the #1 flower and be free cash flow positive in Oregon, which is one of the most or the most competitive states with one of the most or the most discerning customer base with the lowest cannabis pricing, though the cannabis pricing, I guess, is starting to increase, which is nice. And that you're free cash flow positive, and you were free cash flow positive when indoor flower was $800 a pound, was remarkable. But then that you went to Michigan, and when prices collapsed, you're still kind of, zoomed up the charts to be one of the top flower brands in Michigan, but also to do it while being free cash flow positive. And now that you're going to Minnesota and Michigan, that's how I think when I put on my investor hat. Can you give us? Let's just go to the qual, because I'm trying to understand exactly, as much as you can share to a person who is not a cultivator, but as an investor. When I think about what you can bring, and maybe they're related or not, but there's the quality side, right? Which is it's even referenced the quality and yield of top grade cannabis flower, which obviously helps you with price. But I guess if you produce more, your cost goes down. So, but then there's also that grown rogue factor, which is, hey, we produce this top grade flower, but at a cost that no one else is able to achieve. So I'm wondering if you can talk about the interplay or just separate them out. How should investors think about where you're shooting for to goodness growth to improve those two categories of a company that has positive EBITDA, but is still burning cash flow and not free cash flow positive like Grown Rogue?
Yeah, it's a good question. The short answer is the first mandate is to get their systems to be consistent. A lot of things we see with, and goodness was, subject to this as well, is, they're very unreliable in terms of what's coming through. And that puts a lot of strain.
You turn this about the quality. The quality of the flower is very inconsistent.
Is super inconsistent. What happens is then your consumer can no longer rely upon, or your patient can't rely upon your brand or your business as something that they can count on. And so that was #1, fixing that. And we did that through a few ways. One, we made some infrastructure improvements, right? So we spent we told them, hey, we need to spend a little bit of cash. Let's fix a few things here. Not a lot, like peanuts when it comes down to the big picture, but let's make the infrastructure better so that we can get more reliable production coming out. So that was step one. #2 was installing our production systems, like from the growing perspective, right? To have consistent clone all the way through veg into flower, right? Genetic planning, scheduling, all those things to just create a more reliable, kind of beginning, which is going to translate to what you can actually put on a shelf and the customer can take home and consume. And then post kind of production, what we call in the post-harvest process, was really changing the culture and the way they think about product. Their handling practices, being more gentle. We changed the way they manage it post-dry. And we've already seen a significant improvement in the A to B ratio. And that's just through like really no measurable change in cultivation yet, because it takes 3, 4, 5 months for a crop that we're responsible for to end up in a shelf. There's the clone, the veg, the flower. I mean, it takes 16 to 20 weeks. But even taking their existing harvests that were coming down, just changing the post-harvest handling processes had significant improvements. And we're already seeing that translate through. Like, consumers are having better reviews. The team is happier to be handling product that's cared for in this way. Costs are being driven down some because it's just more efficient to do it the way we do. And quality is going up. And so, we're seeing, I'd say 20 to 25% of what I wanted to do in the first 3 to 4 months. We'll see another 50 over the next 3, right? And that'll take us to about 70, 80%, probably 6 to 9 months in. And then we'll get into the very kind of nuts and bolts, like, how do we really fix some of the cost structure to continue driving their cost of production down? But it's definitely a very incremental improvement process. So hitting the most bang for your buck very early and getting those things resolved and having that translate. A good example is, as you know, cost control is super important to Grown Rogue. And my lead grower, who's now in Minnesota, wanted to bring our IPM specialists out. And my question was, is it because
what is that? Can you just, for someone who doesn't know, what is you said IPM specialist?
IPM, integrated pest management.
Oh, okay, good.
So,
I just want to make sure.
Standard, standard cultivation term, but for it's pests are one of your biggest challenges if you're not managing them properly. And so he wanted to bring our IPM specialists out. And I said, why? Is it because we have a bug problem or because you're trying to save a few bucks on costs? And he wanted to save a few bucks on costs. And I said, great, not the biggest priority. Fix their vegetative process, get the schedule right. Like, we'll bring him out in 4 or 5 months, right? So it's about prioritizing and really aligning, the stepwise process to build the same system that Grown Rogue's implemented, but in a sustainable manner, so their team can be trained and so they can take this thing forward. And with the end goal, right, it's all about the customer, making sure the customer gets great product at the end of the day that they can rely upon. And again, like, the reviews already coming out from, like, you'll read like the Reddit forums and you'll get feedback from some of the patients coming into Minnesota or some of the customers in Maryland. It's just been all really, really strong. And so far, so good. The summer will be very interesting. They're growing greenhouses in, less than hospitable climates, a lot of humidity, Minnesota greenhouse, like, just think about that for a second. It's not like glass house in California where it's sunny and dry. And but we're very confident that, we'll never reach quite what we have for the indoor perspective in Grown Rogue's facilities because of our control of the environment. But we're going to create really, really high quality product at a much better price than they've seen historically.
Gotcha. So you gave me a lot of information that I was already going to ask, which was when you expect. So we're expecting more. So from what I'm hearing, we should expect a continual improvement in Goodness's quality, and that should also help costs. But the bulk of that kind of improvement, you're hoping to see Q3, Q4, that should
Correct.
translate out, which is kind of great timing when you think about Maryland going adult use on July 1st, literally Q3. It's like perfect timing. That's really so now let me switch from just how you're helping Goodness to I'm an investor in Grown Rogue. What does Grown Rogue get out of it? I see from the press release that it says, again, kind of vague language. It says the incentive structure of the agreement whereby Grown Rogue only benefits and Goodness Growth benefits as well. And I guess this is your quote, reflects my confidence in our operational ability to drive improved cultivation performance. And I am excited about this opportunity because we have one of the best operations teams in the country. Okay, so you're hitting some kind of incentive. What is it? What is Grown? I saw you did a warrant swap or whatever. What does Grown Rogue get out of?
It's funny, the legal and the PR teams are always trying to temper. It's not one of the, it is the best operation team. That's what I would like to say.
I
Our team's amazing.
agree. I haven't been able to find another at your size or whatever that does what you're able to do. So
there was really kind of 4 components, and all this will get like the independent contractor agreement we signed will actually be posted publicly as part of our filing requirements. But a little bit of just, information around that. There's kind of these main components, right? One was the warrants, which is the security. And that was really to reflect the long-term kind of protection for both sides. Like Grown Rogue wanted some of that because we think goodness is undervalued. We think with some of the improvements that we're going to see a return of their market cap and share price like they had, kind of even pre the Verano, kind of items that came up for them. We gave them some warrants in Grown Rogue because, it's a lot of companies don't appreciate the excellence that we bring. And so, giving them an opportunity to participate as our kind of Grown Rogue's coming out party, like, be a great operator in Oregon, Michigan. People are like, oh, that's great, but you're small. Like this kind of puts us on the national stage. And so allowing them to kind of share in that upside. And so that was one part of it. There's an IP agreement based in that really protects Grown Rogue's kind of brand, our packaging, what we do while still giving, goodness and Vireo all of the soft IP, we call it, like our systems, our processes, things that they can take long term. And so it'll be nice to put Grown Rogue's brand into a couple new markets, and we expect to start, kind of rolling those out towards the end of this year, first part of next year. Some of our
Grown Rogue's brand will be in Minnesota and Maryland. Oh, yeah. I didn't realize that. Okay.
We're definitely more of an adult use organization. And so we'll probably in, Minnesota probably wouldn't go into the medical side, but as, Maryland's launching adult use. And as we get the quality where we want it, some small percentage of what we produce and, a lot of it's going to be supporting Vireo and Goodness's brand, but, we're putting some stuff into the Grown Rogue side. So that was one part of it. We only get value if we increase performance for Vireo. And this is one of the things that I really liked about the deal is that, it's how I've always been. It's like, it's not about just don't pay me for like an hourly rate. Like, let me show you how successful we'll create. And we only make money if you make money. And so we created this kind of, like income equation that is, kind of proprietary to our deal. But essentially, it's going to value the improvements that we create for Goodness. So the better we are, the better Goodness starts to operate, the more cash they're creating, the more Grown Rogue benefit. And so that's a pretty sizable opportunity for us because, again, it's very low cash outlay. Like we're not spending a lot of CapEx, we're mapping our talent and, some of our team's bandwidth against this, which is a cost that we'll absorb. But it's only blue sky for us in terms of opportunity. And we expect this to be 6 figures a month in terms of value that we're going to create. And so we're pretty excited about that just dropping to our bottom line and, seeing where that goes as we continue to make improvements and then take advantage of the market size increase that you're going to see as both their states go adult use. The other thing is the term, right? We've got a pretty long term negotiated into it. There's some extensions and, Goodness has the right to terminate this if they don't like what we're doing. But in order to protect us, one of the things we got a lot was, okay, Obi, you're going to now go teach this MSO all your secret sauce. They're going to take it, say thank you very much, and sayonara. So we negotiated like a strong termination fee just to protect ourselves against that. And so overall, very, very excited with the agreement. Specifics and details will be when it's filed, probably this week or next. And so people will be able to go through that. And there's more questions, happy to answer some of the specifics, but it's a really good deal for Grown Rogue. It's a great deal for Vireo. And it's a true collaborative partnership where, we're not successful unless they are. And unless we help create success, they're probably not going to be as successful as they should be. So it's great.
This is really, it sounds like a collaborative effort. And that's probably why there's the share swap. Why there's an incentive. And it sounds like the two teams are working well together to the benefit of both. Is that? And then you've been working together since January or February. So you've been working for a while.
Yep.
Is this now, should I think about this as a potential precursor to a merger, or how, as an investor, should I think about what this, or is this just, hey, this is a strategic partnership, let's see how this goes, and we don't know anything about? How would you comment on that, Lon?
I think what Grown Rogue has through this is tremendous flexibility, which is always a great place to be. Now, I mean, no secrets, right? The interim CEO at Goodness is Josh Rosen. He's doing great things to help fix some of their balance sheet. All Grown Rogue's really coming in to help with the operational side. We're not retail experts, so there's some, work being done on the retail side as well. Processing, I mean, they've got a lot of different fingers in the pie, so to speak, with how much product and the verticals that they're associated with. But Kyle's fantastic, right? He's been to Oregon. I spent several days with him out in Minnesota. Like, he's the founder, he's now their executive chair. So the cultural connection and the trust I have, and just working with them, like Amber Shimpa, who's now the CEO and kind of the president of Goodness, the CEO there in Minnesota. Just great team, across the whole stack, down from their kind of leadership team, down to their management team, down to the teams that are working in the facilities. Like, there's just been a really strong, positive approach. And that's step one. You don't, again, no such thing as being real bad people. We don't want to work with folks that we don't get along with. Life's too short. Would it go to a merger? We'll see. I think it's set up. I think there's potential there. We need to prove operationally that we can deliver the same level of success. Otherwise, why would they want to merge with us? They've got some balance sheet things they need to clean up with. They've got a lot of leverage with their lender. They've got some things in New York with IIPR and kind of that sale leaseback. So there's some things that need to get resolved on both sides. But I think, well, why not? You take best-in-class operations with fantastic assets, and you bolt it together, and you have a very interesting kind of organization that comes out of the back end of that. That being said, we're not tying ourselves to it. We had early discussions around, oh, should we just merge it up? And the answer was, not quite. We don't want to be hooked to some of the challenges they face. And, almost like, let's date before we get married type thing. They also didn't want to commit to Grown Rogue unless we can really show that we can deliver the results that we've done in their other states. Because in my opinion, that's the next thing for us. Can we scale the success we've created in Oregon and Michigan? And so far, so good, because what I've seen the team do over the last 4 or 5 months, and it's actually gone quicker and faster than I expected. I'm very, very confident in our ability to take this from Oregon, Michigan, now providing the same level of oversight and input in Maryland and Minnesota. Can we get a couple more? Can we take this 12 states across the US where we've got our framework, our system operating at peak capacity?
No, and I think this is one of the benefits. It's just a reminder to anyone listening, is you only really do cultivation. So that's your main focus. And so I think one of the problems that a lot of companies have is they have, and I've talked about this before and written about, is there's 3 disparate businesses for many cannabis companies, where for a variety of reasons, kind of necessity, you not only have to be a farmer, you then have to be a manufacturer, you have to build brands, and you have to retail, which are just completely different businesses. And I think it really benefits Grown Rogue, your sole focus on cultivation and being the best in class at growing flower at the best cost. And we're going to be, now that we know, one of the great things that I know that Goodness is now reporting is what percentage of their flower is like that grade A flower.
Yep.
And it's going to be really fun, because now I know you started January, February. So maybe there was a tiny little impact in Q1, and we should be able to see in Q2 and Q3 what the Grown Rogue effect is. And that will be fun. Fun to
tell you it's going to be material and measurable. It already is, which actually will be interesting, right? Because like a lot of the big MSOs, they like to promote, biomass and it's almost like, like a lot of the Canadian LPs used to report their total weight in grams. So they can have like, we did 50 million grams of, it's like, come on, like do it in kilos or pounds. Like you're just games mean shipping the numbers. But one of our post-harvest things is we're part of their biomass was actually incorporating a lower quality product, stuff that we would throw away, like fan leaves and stuff like that. So well, we expect to see a massive improvement. We've already experiencing this in like A to B ratio. We'll actually probably see total weight come down a little bit because they're reporting things that, like it's just trash, like throw it away, get rid of it, focus
Yeah.
on the best stuff. And so it's, I'm excited to see what they can do, excited how our team is integrating it. And there's a lot of, just a really bright future for them right now. I mean, they've got their debt they did with Chicago Atlantic cleaned up. They got a little bit of time now. I think they've got really, really strong partners there. And I think if we can help with their production, some of the things Josh and Amber and Kyle are doing from the business side to kind of give us some runway. I mean, this organization.
You're making me want to go out and buy goodness.
Which
by the way, I own some shares, full disclosure. It's a small position for me, but no, thank you for saying that because, it's kind of been the idea out there is it's kind of been left for dead and that they have kind of no hope. And you're painting a very different picture, which I'm really glad. And it's not even coming from, it's coming from a company you're just partnered with.
I mean, let's put it in perspective. Their market cap today is about the same as Grown Rogues. I think it's like 30 million Canadian, give or take. Right? What did GTI pay for the other Minnesota license 2 years ago?
It was like 155 million, I believe, US dollars.
Let's even say they paid 3 times as much, or not even 4 times as much. That's the entire market cap of goodness. It's just that license.
Yeah.
I think they were priced for bankruptcy for a bit, especially coming out of the Verano termination, right? There was just a lot of what are they going to do? They haven't shown to be great operational, mapping operational talent towards their asset base. And I'm bullish on them right now. I mean, part of it is we have a partnership, right? But like super bullish on where they sit today and what the opportunity is in front of them. With the way I've seen their team, how much they care, the passion, some of the things we're bringing, some of the other kind of talent they brought in, their existing kind of core base. They've got.
And what I love.
Yep.
You know what I love about what you're bringing to them is it's not like what they needed was like massive capex.
Yep.
What they really needed was the blocking and tackling, the processes. Especially, I loved what you're describing about the post-harvest of how important. It's very similar to what like Graham Farrar and Glasshouse are working on with their drying and storage and how much opportunity there is just after you harvest. So I love this idea that you're just bringing to them expertise and process, and even your guy talking about pest management and prioritizing. But I love it is that you're bringing that improvement of quality, but also with Grown Rogue's cost mentality. So it's going to be really fascinating to watch. We're going to watch a real world example of what Grown Rogue can do.
It's been the cultural integration is a big part of that. And I think, I know Grown Rogue has their trust, which goes a long way. Part of that's Josh's relationship with being an investor in Grown Rogue. So he already believes in what we're doing. But like you could talk to Kyle, Amber, like they have ultimate trust in what we've been able to establish. And so when we recommend something, again, it's not because we don't spend money. Like even the money I've asked them to commit to these small infrastructure improvement projects. Some of the stuff's like simple, like we need better airflow, put some fans in. I look at it like it's my own cash. Like there's times when I'm like, oh, this, and I'm like, that's crap. Like it's not going to cost that much. I'm going to rethink that whole process. And it's that kind of stuff. Like I haven't changed. I don't look at goodness any different than I look at Grown Rogue's business. That's ultimately the fundamental fact. And part of that's because we're incentivized through performance. And if we spend a bunch of money, we're not going to see any improvement because it's just all gets eaten up in expenditures. But part of that's just how we operate. And it's just part of our DNA. And even my team is just, watching the way they're going about making some of those same decisions around, hey, we could really use this. Well, it's going to cost that. Well, how about I just make this workaround work for the next 6 months and let's get some profitability going, make sure our systems are working right. Then we'll go spend that money. And it's been really, really exciting. And yeah, not like pins and needles, but I'm like, the proof is going to come over these next 3 months when we really see the things that we put in place. How does that translate? Better yield, better quality, better consistency. And so Q3, Q4, I think are going to be monumental shifts. If they're not, we're not doing our job, but it should be a big shift in the way goodness is perceived. And we'll start to show the beginnings of how this company is going to be able to operate in their core markets. It's pretty exciting.
That's great. Now, focusing back on Grown Rogue, your core markets of Oregon and Michigan. Can you tell us how it sounds like there's prices are starting to rebound? And we had talked about before, California kind of leads in many ways. And then you had this kind of massive wipeout and the price started increasing. And I think in our past interview, you had mentioned that things were tight and you expected that normally that leads to pricing increases. Can you give us kind of an update on how things are going in Oregon and what you see in terms of inventory and pricing, and then maybe also give an update on Michigan?
Yeah, our core business is operating in pristine condition, better than I've ever seen it. And that's all of the efficiencies and systems we put in place continue to hum. If anything, they're just getting incrementally better. We've talked for 6-8 months, and it's been a year for Grown Rogue where we've been pretty much carrying no inventory. Like we can't make it fast enough. And that initially hadn't translated to price recovery. Like we still saw a little bit of compression coming in Michigan. Oregon was pretty stable, although we saw a huge improvement in outdoor this year, which really helped. I mean, outdoor was up, 100%, from pretty much money losing prices to, make a little bit of money. And so that's been really good. But just over the last 2 to 3 weeks, it seems like I think I mentioned this on a tweet the other day or something like this, but Michigan's up 15-20%, Oregon's the same. And that's just been really, really short time period. And the reason that's so important to us is we're actually coming into historically the highest demand, highest price seasons of cannabis, the summer. I mean, that's when demand's the highest, people are outside, they're going to concerts, they're being social. There's less supply normally because the outdoors kind of dried up. And so, we expect to see this kind of continue, but we feel like that wave has been overcome of what maybe the reserves were sitting in some people's kind of inventories, buckets or whatnot. But, knock on wood, it continues, but price has been going up quite a bit, and the business just continues to operate really, really effectively.
Which probably gives you confidence to then be able to, obviously go after a goodness and secure a goodness deal. But also, I know from our previous talks, you were looking at other markets as well. And, you even referenced this before, that your goal is to get to like 10 or 12 markets. I know you're not stopping with this agreement and you're still focused on new markets. Like, does Grown Rogue have the capacity to go after new markets still this year? And like, what are your plans? What's next?
Assets are cheap right now because there's no capital available in the US.
And you have free cash flow.
We have free cash flow, but we also have, if we wanted more cash, we'd go get some. And so we're definitely gonna be working very hard to take down at least one more, maybe 2 more states this year. We're talking internally about, biting off more than we can chew. But the way it's actually kind of the timing is actually working out really well. Like the progression I've seen of how our team has been able to deliver our implementation with the goodness operations has given me a lot more comfort that we can scale this thing. Again, I said
Because
that earlier,
that's the key, right? The key is people, right? And that
people.
transferring your
Yeah.
culture, because I've
Yep.
watched it with other companies that have expanded and they've bitten off way more than they could chew,
Yep.
and it's gone to hell.
Yeah, I think is it a marathon or a sprint? People always talk about those things. We've definitely taken this as a marathon approach. And so not getting overextended. We also know who we want to be. Like we never set out to be the biggest. Like I'm not Boris. I'm not saying I want to build the biggest cannabis company in the world. Like that's not what I get excited about. We've got a very clear expectation of who we want to be. And we're in it for the long haul. Like this isn't like, of course we want to make money. We want to return money to our shareholders. We're going to do all that, but it's about building a sustainable business. And I can't stress enough the team and the culture. And so many companies have overgrown that and they've lost their way. And so I would be very surprised that if in the next 2 to 3 months, we don't announce another opportunity into a new market.
And that new market would be like another kind of limited license state, right?
Of course. Yep. Yeah. I mean, we
and this is the most exciting from an investor standpoint, is like taking Oregon, a company that's used to producing in Oregon and Michigan,
yep.
and doing it free cash flow and going to some other limited license state where prices are much higher and competition is much less. So you believe in 2 or 3 months, you'll announce yet another.
Yep. Yeah. We're in the middle of working on 2 of them right now. And again, like we have more capacity we could build into in Michigan. We're generating plenty of free cash flow there, but we're not spending it against more expansion there. Because again, it's not the best place. We don't believe currently the best place to invest our capital. And so, like even the money we raised from your investment in December, like it's still sitting on the balance sheet. Like we spent a little bit on like giving us a little bit more flexibility in terms of timing, but we didn't just take it and just rush out and, let's go build another 3 rooms in Michigan, or, let's spend $500,000 on more outdoor production in Oregon. We were like, we know there's opportunities coming. Let's continued our disciplined approach, and let's do what we've done for years now, which is being one of the best allocators of capital in the space in terms of the return on that investment. And I think we're going to see the same opportunity coming up here soon, where not just mapping our talent, our bandwidth, like we are with Goodness, where it's a very low cash, but looking at a market where we actually, something similar to Michigan, where we have majority control or full ownership, and it's more of an owned asset. We'll map some of our cash, and obviously, putting our talent against that will be paramount to success.
Well, awesome. Obi, this has been fantastic. And it's going to be really exciting watching the next, 6 to 12 months to see the not only improvement in Goodness's results, to see what impact this has on both of your companies, to see, I guess, the next 1 or 2 other limited license states you are entering. It feels like it's going to be a pretty full year for Grown Rogue.
It is, I think.
And that you're getting aggressive at the exact time that everybody is pulling back.
That's just what I was going to say, like being a little greedy when others are being fearful, because there's a lot of fear in the space right now. But again, not getting away from our knitting, which is the disciplines which has made us so successful. So being very strategic in how we look at our expansion and our growth prospects, and not being like distracted by shiny objects. So everything we do it's thoughtful. It's within our kind of strategic plan of where we want to go and how we want to expand, and the things that we're looking at that pretty confident we'll get through. It's right within kind of the sweet spot we've established. So it's exciting. It's good. It's going to be 2021 was a year of kind of growth. We built Michigan, we bought the acreage asset, market collapse. That was very painful. 2022, we really right-sized and created all the efficiencies we've established. And now here we are in 23, looking at the next phase of growth for the organization. So coming out of 23, into 24, it's going to be a much different company than what you had, last year.
Well, great. Obi, thank you so much. I really appreciate it.
Thanks a lot. Thanks for having me.